All right, I think we're going to go ahead and get ourselves started here, just for the sake of time and respect everyone's time was on the call. Thank you all for joining in. Again, this is the Standing Orders tutorial with Royalty Exchange. We have a new feature that we're offering to all investors that allow you to conduct automated investing on the platform. My name is Anthony Bruno. I am the Director of Communications here, and with us we have Matthew Smith, our CEO, and Ryan O'Connor, our Financial Analyst. And together we're going to walk you through what this feature is, why it's good for you, how you can use it, and so on. So without any further ado, I'll get started. Basically, again, here's the agenda for today. We'll just quickly introduce the feature itself, the benefits of it, the process, give you a quick live walkthrough, and then answer your questions. So for the benefits, I'm going to hand it over to Matt briefly, and he can kind of tell you about what it is that what we've done here and why you might want to think about using it. So Matt?
Sure. So what we're trying to do with the standing order features, I should say, has been out now for quite a while. But it's only been available, been in a sort of beta test, only available to our all access members. And what we've done very recently is make this on a limited basis available to anyone who uses the Royalty Exchange platform. So that's really what it is. Now, the idea behind it fundamentally is it allowed you to have a passive approach to acquiring catalogs over time. So rather than having to always be watching for new listings to make sure that you were available when auctions were closing, and certainly for some of the larger investors that we worked with, we knew that it was a big problem for them, that to always be available for all the auctions that were happening. So we said, well, if you could define the criteria that you would use to buy catalogs and just acquire them when that criteria is matched, would that work for you? And certainly it has. And we'll show you some of the results that people have had using standing orders as opposed to auction house in a bit. Now, the auction house is still the primary way that we originate assets onto the Royalty Exchange platform, and it's a great way to learn about these catalogs and definitely to acquire assets. But it's not the only way. Obviously, I assume you know at this point about the secondary market that we have, and you can go in and you can place individual bids for those as well. But there are certain catalogs that never actually make it to the auction house at all. And how the reason they don't make it to the auction house actually is because behind the scenes, we've made it available. We've made a tool available for some of our our artists that we work with who are predisposed to disprefer auctions, let's just say. And we give them another way to find out about their catalog value. And we'll get to that in a minute. But with the standing orders, you can accumulate a catalog, a portfolio of royalties without having to be actively engaged in the same way you would with an auction. Prices adjust constantly for these auctions, and so not having to stay on top of them and bid frequently, and also not getting swept up in some of the emotional pieces that really do happen in auctions. It's just impossible to avoid. I participated in an auction myself over the weekend, and I controlled my emotions on one, and I did not control my emotions on the other. It's the bidding process. It can be that way. So, by the way, it wasn't an auction on Royalty Exchange. It was an auction for some antique products. But
thank you for clarifying that.
Yeah, I like auctions though. So in any case, so standing orders though allows you a hands-off approach where when a catalog is available that meets your investing requirements, the order gets filled. Just like placing a standing order, you might place a standing order, a limit order for shares in Apple stock or something like that. It works much like that. It also gives you early access to assets that don't really make it don't come onto the primary market through the primary market of auction house. Instead, what happens, actually, I'll save that again for later, going into exactly how that works. But there are catalogs that are only available there. So let's leave it at that for now. You can essentially identify the criteria that's really important to you, the multiple that you're willing to pay, some quantitative metrics that we'll get to here in a second about how to actually, that we found to be very useful in placing these orders. And then we'll also just kind of share some of the standard asset metrics that all of these have. Yeah, if you guys have, I don't know how, I wish this was more interactive. I'd like to know how many people have actually looked at the standing orders, because we like to do everything we can in public. So there's a list of all the existing standing orders right now on the website, and you can go there and you can see every order that's been placed, every order that's been filled, and every order that's currently open. And it gives you a lot of insights about the market.
Yeah,
So
let me jump in. So what I could do here is I could ask anyone if you want, if you have looked at the standing orders or looked at the secondary market, as Matt's been saying, you can just simply use the function on the screen here that allows you to raise your hand. I won't call on you to actually say anything. I just want to say raise your hand, so it's like a quick poll. We can kind of get a sense of who's done what. So looks like we've got a couple of folks that have explored through this, Matt.
okay, well that's good.
And
All
let me
right.
jump in. Sorry, one other
Yeah.
quick point I want to also add. I know that one person's done it already, but if you have any questions, please type them into the Q&A. We're going to address them at the end once we get through everything. But please, as you think of them, type them in, and we will get to every one of them before we end the call today. Thank you.
Great. Okay. So yeah, so essentially there's one of the things that's a downside about auctions actually is that there's you've heard the expression of signal, sorry, I can't speak today, signal and noise. And a lot of times the information that you get about a particular asset might not necessarily be information that helps you make better decisions. And in fact, it can actually be information that can sway you in the wrong way. And so for instance, things like what the artist's name is, the artist's name, because it does feel like it's a popularity contest to some degree with music. It feels like it quite a bit from time to time. And so we're drawn to artists that we know, artists that we're familiar with. Even though if you're, a little older like I am, then there's a certain artist, newer artists I don't know as well. And I might not recognize the value of that catalog because I just am not familiar with the artist. It's just not the music I listen to. So using these qualitative metrics like the artist's name, whether or not they've won any awards or things like that. I'm not saying that's not useful information at all, but I think it's not as useful as the quantitative metrics that we feature within our listings for the auctions. And the things that we focus on, as I'm sure you guys have definitely know, are dollar age, the earnings in the last 12 months of the catalog, and the trend rate of the catalog. And what we found is that those criteria alone create a great framework, assuming you have a good filter to filter out certain outlier catalogs. That within that criteria alone, the dollar age and essentially a multiple of earnings you're willing to pay can give you pretty good results as you're actually putting orders in on catalogs. I'll show you that in a minute, but quantitative metrics tend to produce better results, we found, and we'll show you that in returns information that our investors have actually experienced with using standing orders versus auctions. Let's go to the next slide. Ryan, do you want to talk about this a little bit?
Yeah, certainly. So, and you guys might have seen this on a previous webinar, but this is just a kind of a risk management or a kind of return distribution is what I like to call this chart. And it kind of shows your outcomes. And so this example is just, let's say, a hypothetical catalog that earned $10,000 in the last year. And an investor is looking to, say, purchase it for around 5 times. This example in particular would be for a 10-year term deal, which I believe the non-all access members will have the option to buy. So set it up as a 10-year term deal. I used different rates of change. You'll see from a -5% to a +5%. And I picked that number and we'll talk about it here in a minute, but we tried to filter out catalogs that have greater than a -5% annual decline on an adjusted basis. Again, we'll get into that, but this is just to kind of illustrative purposes. But essentially, the reason I show this is a lot of investors think in multiples, and as we can see with this chart, even paying 5 times on a 10-year auction, even with an annual decline of 5% every single year, you're still getting a positive return of 9%, just above 9%. So still a great outcome, even with a pretty, over time, a pretty significant decline that you'll see. And this is for the illustrative purposes to show you that you can actually pay more for these catalogs, and you can tend to put orders in that, say, might be above 4 times or 5 times even, and still have a great outcome. And we'll see this in a couple future slides here shortly. On that chart in particular, though, you'll also see your break evens, right? You break even around, no more than 6 years, even in kind of the worst outcome here. I did on a separate kind of street model it out to be a -10% annual decline. And even if you were to look at it that way on a 5 times multiple, you're still have a positive, I believe it's just over 3% IRR. So, I mean, again, I
Not
think
great,
yeah,
but not
not
a
great,
disaster.
but again, that's a worst case outcome, let's say, right? We wouldn't expect that outcome to happen, but even if it were to happen in this situation, right, you would still have a positive return, right?
Yeah, the main reason that we did this kind of just basic framework analysis a couple of years ago, just to be able to, in our own heads, understand the range of outcomes given some scenarios. So we're not telling you that you should pay 5 times for any asset. We're just trying to show you that even if you paid that, which we would consider on the upper end of, it's certainly above, it's higher than the median paid for these catalogs for on a 10-year term, certainly. So even in that scenario, you know, the outcomes are pretty positive, even if you have declines.
Yeah, and when I originally started, and when I kind of first came on board, I was like, how would anyone pay over four times for a 10-year term? And so this is how I set it up, and it instantly was like, I see why. This is exactly why you would pay over 4 times, 5 times, even 6 or 7 times for a 10-year term. Again, it's going to be asset specific, but this is how you can get those higher multiples. Great. So this is just going to kind of, again, represent what we've been talking about. So this is our return from 2019. So on the left here, we see our auction house return on investment. And just to clarify, this does take into account principal on the 10-year terms, right? So with the 10-year term, it's taking into account the principal that's being returned to you, plus the actual cash flow you're getting above and beyond that to create excess return for the investor. So as we can see on the auction house, we have about an 11.5% return, but through our standing orders, we can see it is much higher at 17% annual rate of return. And I attribute that to a couple of factors. As we talked about before, there's not that bidding competition. You don't get sucked in emotionally and kind of are bidding against other people. You get into that kind of the bidding war situation. And as Matt said, I think it goes back to just bidding blind. Essentially, you know, you're bidding on a quantitative metrics here, and you're not assessing any of the qualitative ones in the sense, who's the artist, what's the song, that sort of thing. And I believe that pulls the emotion out of the investing process for royalties and actually results in alpha or above average return.
Yeah, I think one thing is like people have a natural bias in music. We all do. We all have our preferences.
Yep.
And so there might be a genre of music that you think is highly valuable. It's probably the one you listen to the most. You probably think that's the most valuable. And there might be another one that you look at and you go, how valuable could that be? I wouldn't want that. That'll never last that long. And I think, for instance, I know there's a lot of people that have had that bias toward things like hip hop. And yet, you know, hip hop has been around for, I think that they've been counting on the end of hip hop for 30 years now, something like that. So it's not going away anytime soon. And there are some amazing catalogs that come through in that category. And if you were to disqualify it simply because you're lack of familiarity with music, you could be hurting yourself from a return basis. So, and of course, as Ryan said, the bidding emotion that falls in there too can also be a factor. There's a number of reasons why maybe these returns were better, but I think that those are the 2 primary ones. Okay. And go ahead.
Yeah, I thought what we would do now is since we're talking about this, talk a little bit about the process so they could see precisely what types of catalogs come into the standing order process and how they're able to leave their orders. I think that'll kind of really crystallize the points that you're trying to make right now with some specific details. Perfect. So Ron, you want to quickly maybe explain what are the different, like when you do leave a standing order, what are the elements of that order that you're leaving?
Yeah, great. So when you go through the standing order process, and we're going to do a walkthrough this of the actual process at the end of this, I believe, you know, you get to allocate the total dollar amount you wish to invest across, you know, the amount of catalogs that you want to purchase. You get to set the dollar age of the catalog, like the minimum dollar age that you're willing to accept, and then you get to also set the multiple that you're willing to pay on and this was a recent change after we did a study which actually reflected would actually probably improve the marketplace here. But essentially, you're going to pay a multiple on the lower of the last 12 months earnings, or the 3-year or the average of the last 3 years of the earnings, whichever is a lower amount there. And so
you plug in the multiple you're willing to pay, and then the order is filled with based upon the lower of those. So whichever, so you're going to pay the specific issue where there's potentially a problem with these is if you just did it just on the last 12 months, there could be just a spike in earnings, an unusual spike in earnings that happens in maybe the last, 2 quarters ago. And that could cause you to pay more for the catalog than you would otherwise should pay. But by doing the last 12 months or the average of the last 3 years, you end up, and choosing the lower of the two, you end up with the best possible outcome. And it makes the multiple bidding more conservative than it would otherwise have been.
All right, let's talk a little bit about the types of catalogs then that actually come into the system.
Yeah, great.
And I think this is really important. Actually, I'll also, somebody set it up, is that this is the only way this works, by doing this blind. Now, you might look and go, well, we're just giving very little. The order criteria is very limited, and that's true. But there's lots of filtering that we do in advance to disqualify the vast majority of catalogs we see from eligibility to be matched with standing orders. And Ryan, if you want to go through those, please.
Yeah, certainly. So we'll just touch on each of these quickly here. So the first one, and you hear us talk about this all the time, but again, it's what we believe is one of the most important qualities of the catalog, is going to be the dollar age. And we filter everything that is less than 3 years. And again, that's just due to, we can't accurately assess the historical earnings of the catalog. There's also a earnings curve that tends to drop off pretty drastically, say between 0 and 2.5 years. So we want to make sure to filter that out. We have a minimum of 1,000 in the last 12 months. Again, that's just to make sure you're not being filled with thousands of little catalogs, that sort of thing. The trend rate. So we use a trend rate of -5% annually or better. So So over the last 3 years, it's had to at least not decline more than 5% or more. Now, we adjust that a little bit to take into account one-off payments, things that say might be uncharacteristic. Essentially, we're trying to find the underlying reliable cash flow of the catalog, and we take the cash flows that we receive and we adjust them a little bit depending on if they're outlier or not, essentially. We also make sure that you're not getting production music, as we talked about before. That's a completely kind of different type of royalty stream. As of right now, they're just PRO catalogs, so public performance royalties from ASCAP or BMI. And then the last one is and this is again to shield you from huge spikes in the last 3 years, but essentially the LTM, so the last 12 months can't exceed more than 2 times the 3-year average, right? So if a catalog, in the last 3 years has annually earned $1,000, and then in the last year it earned $10,000, right? There's too much going on there that can cause significant declines in the future for the investor. And all of these criteria are to give us the highest quality catalogs that come into our universe.
Yeah, mostly, if nothing else, they substantially de-risk the catalogs that you would be matched with. And that's the most important thing, is to be, so when we first built this, I was just beta testing with my own money. And I was like, what are the criteria where I would feel comfortable buying a catalog without ever seeing it, or without seeing it until after the purchase, I've committed to the purchase. And, we started off with a few criteria and we added several others and ultimately ended up with this. And this is what it takes now to be what we call order book eligible. And I should say that it's something like 80% of the catalogs we see do not qualify. So for this to be auto-filled like this.
Yeah, and to further speak to that, our results kind of speak for themselves. As we saw on that returns page, the average return from the order book, the standing orders is significantly higher than the auction.
Yeah, that's the other criteria we didn't really mention, is that because we have a much higher standard in terms of what the history of the cash flows have to look like in order to be automatically filled and eligible for standing orders. We don't have that same criteria when when something's going to auction, because you have the time to check it out. You can look at all of the earnings history. You can look up the specific songs, and you just have a lot more information in the auction. So, but maybe we're more conservative in our for what it takes to become eligible for order book fills.
All right, great. So maybe talk a little bit about where the source of these catalogs that we're matching standing orders to come from. Again, with this eligibility in mind.
Okay. Well, let me start off with what one everyone knows already first, which is the secondary market. So, if there's something for sale in the secondary market, and there's and it meets the order that you have in a standing order, then that match is just made. And now here's the thing that's interesting about that is that some assets, all the assets in the secondary market that are 10-year term, are going to be for some period less than 10 years, somewhat less, because they have, obviously they're in the secondary market. So when they originated, it was 10 years, and now maybe a year has passed. So the multiple that you pay actually gets reduced proportionally to the time left. So if there's, if your order was for a 5 multiple, and there's there's 9 years left, then the multiple would be reduced, correct me if my math is wrong on this, Ryan, by half a multiple, right? Mm-hmm. So it'd be moved down to, 0.25 of a multiple would be, no, 0.5, sorry, it's 0.5. Yeah, 0.5. So essentially, proportionally, it automatically gets adjusted so that your offer is lower based upon, gets proportionally lower based upon the amount of time that's actually left. So that you're still paying the same normalized amount. It's
worth noting that's an optional feature. Yeah, that's something that you have to enable. But generally, go ahead.
And I would just say I wouldn't be discouraged from buying those partial terms, right? There's still value there, so certainly don't be discouraged from buying something that's less than 10 years.
If it meets your terms, your quantitative criteria, I think it's actually smart. In fact, these catalogs, they over time, we believe in dollar age, right? That we believe that the older something is, the better it is, or the more reliable its earnings are going to be. So if that's true, then if there's less time left in a 10-year, that means more time in the catalog has happened, and you've de-risked that term as compared to what it was when it was originally purchased.
That's an interesting point. So one area of source of catalogs that are matched is the secondary market, which I think we've gone through. I think really quick, we should probably talk about the new catalogs that come into the system, which is really something that most investors really don't have a lot of exposure to how we even source this stuff. And I think that might be of interest.
So we built an analytics application for artists, and essentially they can connect their PRO account, their ASCAP and BMI accounts, with this service that analyzes all of their catalog information and summarizes it and gives them good reporting that really is not available to them right now. You'd be surprised. A lot of artists don't know what their top 1 and 2 earning songs are. You'd think that would be something they would know, but just the reporting, it's actually difficult for them to see it. So we provide them with analytics on the catalog. And in addition to that, we provide them with access to capital if they want it. And so when they go through this process, it takes about 90 seconds. They connect, we download all their catalog information. And then when we do that, we look in the order book and we go, hey, based upon what this catalog looks like, or we look at the standing orders and we see, based upon this catalog's criteria, which one of these standing orders is the best offer available for this artist in this moment. And then we present the artist with an offer, and they can choose to accept it or not. And a lot of times they don't accept it at first, and then they come back later and accept it. But the bottom line is that we have thousands of artists that have gone through that process and done that. And I did see there was a question, someone asking what percentage of our deals come in this way. It's only about 15% of our total GMV comes in through order book, through this know your worth process I just described.
All right, great. So those are the sources. So I'll quickly just kind of run through the full, sort of summarize what we just discussed here, basically. So essentially, the way that the standing orders work is that we either rights holders submit their catalog for analysis using the Know Your Worth app that Matt just outlined, or there are assets in the secondary market that are constantly analyzed as they are added or updated to the system. And we analyze all of these catalogs that we have visibility into. The second step is then we match the details of those catalogs to based on their dollar age and their last 12 months earnings and the other criteria in the standing order, match them to the most competitive open order at the time. All right, so there's an automatic match happen behind the scenes, at which point there is then an offer made to the owner of that asset. Again, either the rights holder who submitted a catalog or the owner of the asset in the secondary market. Your standing order is offered to that owner of the asset, which they can then accept or reject. I think the one caveat there being is if it's the owner of an asset on the secondary market that has set a list price, if your offer meets that list price, it sparks an automatic sale. And then, so then once that's done, there's a due diligence process to confirm that we can actually transfer the process. This is mostly focused on the catalog submitted through Know Your Worth. And there's a due diligence process, ensure that there's a transferability of the royalties. Investor can then review and sign the purchase agreement and transfer your funds within 2 business days in order to complete the purchase. After which the sale is done, and we begin administering the ongoing royalty distributions that you've then acquired. That's the full process. It seems very hands off. Most of the hands on is on our end, yes. But for you, it's a very automated process.
Yeah, the key thing is that what's really new here for us is that we're making this available to non-all access members on a limited basis, and I'll describe that in a minute. But one of the key things it's really important to know is that if you are matched with a catalog, it's expected that you are going to follow through and honor that transaction. Like, we don't take funds in advance, and keep them on account for you or anything like that. So, but we do rely on you that if you have placed an order and that order is matched with the catalog, that you do follow through. Because if not, it undermines the integrity of the marketplace on the seller side. If they get matched with offers, then they fall apart. That obviously discourages artists from doing these sorts of deals in the future, and then undermines all of our ability to be able to acquire catalogs like this in the future.
So I think maybe the easiest way to put it is it's binding. It's binding, but it's also a standing order is really no different than placing a bid in an auction, which I think the folks on this call are probably more familiar with. So it's the same idea. You place the bid, if that bid wins, you're expected to follow through. All right, so I'm gonna do a quick walkthrough. If I can here, Matt, I'm gonna have to stop sharing just for a minute and switch a few screens here, so bear with me here.
Just while you do that, I was gonna say, after you are matched with an order, all of the data is pushed out to you. So you can, see exactly, obviously what you purchase, and ongoing data is provided to you as well. So just like in our auction, you'll get the raw data in the same format.
Okay. So I am now, just bear with me here. It takes a few minutes to actually switch the screens up.
Yeah, and just to elaborate a little bit more kind of on that is, the standing orders look really well for our investors that are able to say create, come up with a kind of a position, like, if you want 10% of your royalties or 20% of your music royalties, right? Buying multiple catalogs through the standing order it is the best way to obviously achieve those results that we showed about a 17% return, right? So, like with any investments, buying one of something is hit or miss, right? So I would, certainly advocate to size your order accordingly, which we allow you to do. So you can, purchase multiple catalogs through the standing orders.
So I'm going to do the quick walkthrough here so they can see exactly how this would work. So this is our listings overview page, which I'm sure many of you are familiar with. Obviously, many of you have gone to the auction house before. To place a standing order, you would go to the secondary market first, and there's a tab here that says standing orders. As you can see, you will select that. Right, and then here is where you'll see these are the standing orders that are currently there. As you can see right now, there's a total of 1.9 million in open orders, a total of 2.2 million in total filled orders. For you to place a new standing order, you would go up here where it says place new standing order. You would simply select that. Now, for all access members, they have a choice to say, I want to either buy a term asset or a life of rights asset. This is one of the I guess the caveats of opening this up to non-all access members is that if you're not an all access member and you're placing a standing order, you will be focused on placing a term-based offer only.
Yeah, we're retaining the life of rights option for our all access members only. And there is one other restriction on non-all access members who use the standing orders feature, and that is that the order amount, you're limited to placing a single order, and that single order amount is $25,000. It's essentially it's almost like a credit limit in a way where we don't because we have to rely on, we have to be confident that, and you want it, we need you to make sure that you're confident that you are, can proceed with any deal where you get matched on. We cap that for verified bidders at 25,000. That could change over time, but that's where we're rolling it out at this point.
Right. And so once you select that term option, you're going to see the details that you can leave. These are the components of your order. Essentially, you're able to say, okay, I only want a catalog that has a minimum dollar age of whatever. As you can see, we've just sort of pre-filled it here as an example of 4.10. I'm willing to spend a multiple, the last 12 months multiple of no more than 6.2, for instance, of the last 12 months earnings, if that's what my details were. And then finally, you can say, I don't want to spend more than this amount. As Matt mentioned, that will be limited to $25,000. And as you enter these details, it'll show you the trailing earning yield components of what you've left, so you have a bit of visibility into the consequences of the choices that you've made.
Let's just plug in those so we can get an example of that real quick. So let's say a minimum dollar age of 6 and a multiple of 4.5, which this is the order I would place, by the way, if I were doing it, and 25,000. What people are, right? So then that it's trailing yield on a 22% basis. Of course, if you're counting on, and if you're making room for any decay in the catalog over time, which you'd want to do. But I'm comfortable personally buying anything I can buy that meets that criteria. I would buy all of it if I could. But I don't participate in this way. You're not competing against me, but I'm just telling you what I would do. I did do it when it was still in beta. This is what I did. So.
Okay, and then lastly, I want to point out that we have these little question marks for each of these options, so you can take a look and get a better sense of what everything means if you forget and don't want to replay the entire webinar to remind you of what these options are. So there you go. So that's how you basically place yourself a standing order. And once done, at any time, you could always look through here and you can see what's been listed, what other people are offering. Yeah, there are filters
as well.
So you can filter out life of 10-year terms. You could filter out the order amount. You can kind of basically take the filters down to what you're thinking of making an offer for. And then you can see what others have left their offers for. That allows you to make a competitive bid, or an offer rather, based on what everyone else has already got in the system. As you can see, there's quite a few. Yeah,
and I will say that we are working on some tools to make it so that it's easier to find, because there actually are gaps. There are real big gaps in some of these orders. It looks like there's a lot of orders, but there really are not. Because they're based upon a specific dollar age cohort. You're basically saying, I only want to buy things that are $6 age or older, then, and I'm willing to pay this multiple for everything that's $6 age and older. Then, it's actually, there aren't that many that will kind of overlap actually at this point, which is why we feel comfortable opening it up to people, because I think there's plenty of room for people to participate here.
Yeah, so I think what you're referring to, Matt, is that we may have some a visualization that allows you to see where there are gaps in the offer. Say, if you want to make an offer right now, there are no offers within this space of the market. Right. And if you were to place one, you'd be the sole bidder, right, so to speak.
Yeah, or in this one, someone's only willing to pay for a $6 age, the same thing they're willing to pay for 3.5, and there's no increased multiple between that space. And we're working on things to make it more obvious where those areas are. Now you'd have to look through it manually, honestly, to see it. And there's enough orders in there that it seems overwhelming. But any other feature ideas, once you guys start using it, you have in mind to make it less confusing, you're open to hear what you have to say.
Okay. Well, I've stopped sharing my screen. I think that's basically all we had to present. I think we've gone through all the details. There was one last slide that explained the restrictions on the process for non-all access members, and I think, Matt, you've gone through that pretty extensively already. So I'm just going to go ahead and jump into the questions. We're already ahead of the game. The first one you've already answered, which was what proportion. Again, that was about 15% of the deals that we've done have gone through that process. Another question is, are you going to enable standing orders to be created with much more specific quantitative filters, such as historic growth rates, comparison of royalty types like streaming versus sync versus TV, etc.?
We are working on some things that are going to make it so that orders can include some of that information. How granular it gets, I'm not really sure. I'm not sure that how fast we get to the most granular steps, but I will say that the very what look like ham-fisted approach that we have now, where all you get is dollar age and LTM, or multiple of LTM, with that, investors have been able to achieve really great returns. So it's like, it's not as though, we're not able to, I think what the opportunity is, if we have more data, then people would feel more confident bidding more for specific catalogs. That's the advantage of having more data. And we are working on some things to get more of that data, to include that in our filters. It's complicated to do it in a way that makes it intuitive for everybody. That's the difficulty.
Okay. Another question here is, how is the trend rate calculated? Ryan, I think you might be ready to
so
jump in this one.
I can touch on that. And essentially what we do is we take the last 3 years of data and we just look at the compounded annual growth rate from those last 3 years of data. Now, it gets a little bit more complicated. Essentially, we look at the statistics of that, and from those payments, in this case, from those quarterly payments, we would filter out an outlier payment. So a great example is, like, let's just say you have a catalog that consistently earns $1,000, but in one quarter it earned $20,000, right? That's essentially an outlier payment. What we would do is we would filter that payment out. We would adjust that payment down to $1,000, and that adjusted trend would be 0 in that situation, right? And again, because obviously in this example, right, it's extreme, but again, like that $20,000, it's an outlier payment. It's not the underlying cash flow that you can expect from the catalog on an ongoing basis.
Right. It's what swings the trend rate from looking like it's, if that $20,000 payment came in the last year, then it can look like it's a thousands of percent growth rate, trend rate. And if it came in the in the middle year, then it can look like, it won't even look like it's even present, really. And if it comes in the first year, it can look like the catalog is just
plummeting,
a mess. It's just a disaster. So that method seems to work pretty well at helping us eliminate catalogs that are, from a de-risking standpoint, it helps. It's enough for de-risking.
Okay. So the last question we have here right now, unless anyone else types in anything before we're done, is the question is, for multiple orders with the same acquisition multiple, how does the platform select between multiple potential buyers? Basically, how do you break a tie?
It actually goes to the earliest placed order if it's a tie.
Is there any other? That's it? Just the earliest placed order?
Yeah, I mean, if someone put an order for $6 of 6 for 4.5, and then I go in right now and I put in for 6 at 4.5, that catalog would go to the person who had the order in initially.
Okay. Easy enough.
It's just rank orders them that way. Seems like
so in other words, get your orders in now.
It's easier, yeah.
Okay,
what
great.
All someone has to do is increase by 1/10 of a percent, the or by 10% or something, the multiple you're willing to pay, or you increase the dollar age cohort up to 6.5 and up instead of just 6 and up. There's lots of ways that you can distinguish your order from others.
Well, unless there's any other questions, I think that's all we had for today. You are able to go ahead and go in and leave standing orders really immediately right now at any point. You've got the ability to do so. We have recorded this session, and we are going to post this and other instructions around the standing order process to the blog, so you can continually refresh your memory on how the process works. If at any time you have any questions about this that you'd like to get answered, again, that our resources don't answer for you, you're always welcome to email us at investors@royaltyexchange.com. With that, I don't see any other questions coming in, so thank you very much for joining us. Guys, want to say thanks to the crew?
Yeah, thanks everybody. Really appreciate it.
Thank you.
Okay, bye now. Thanks much.